Stairs up, elevator down. That's what I think we're seeing with Bitcoin at the moment. Ever since FOMC, we managed to continue to grind up, but we keep on getting rejected right at the yearly open. Bitcoin is now back below $90,000, and over the past few days, I've been quite bearish. What is next for Bitcoin? Are we going to go ahead and sweep those lows around $80,000? Let's discuss it. If you enjoy the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. First things first, let's go over the pattern that we've been tracking on the channel over the past few days, and that is this bear flag. Unfortunately, you can see that Bitcoin today was hovering right around $92,000, and I actually recorded my video before this, but my mic wasn't working. So here I am back at the charts. Right now, Bitcoin is sitting just below $90,000. So this was a pretty decent move down. The question is, are we going to get continuation towards the bottom of this bear flag? You can see here that there are some liquidity zones that we should keep our eyes on as a potential longing opportunity. First and foremost, we have all the way down here below $87,600. Then we also have all the way down here to $84,000. And of course, the ultimate low, which was established over the past few weeks, $80,000. Now, if you've been following the channel, you know that I went ahead and took an aggressive long as Bitcoin was dropping towards that 80K level in the first place. I'm still holding on to some of that position, although I would not be convinced in saying that we're not going to revisit those levels once more. That's why I secured a significant amount of profits on that trade, which I've been talking about on the channel over the past few weeks because I'm simply holding on to that trade. I entered a Zcash short over the past few days. That one did indeed get stopped out, but here you can see my most recent trades, and yes, I am also holding on to a Bitcoin dominance long, which I've been talking about time and time again. The reason I maintain this position is because I do think that Bitcoin dominance can continue to increase despite during this period seeing a little bit of outperformance from altcoins. But with the kind of price action that we've been seeing for Bitcoin, it is no surprise that Bitcoin dominance is starting to increase. Now, I actually think that Bitcoin dominance can go ahead and move higher, which is why I will likely continue to hold on to this trade on Bluffin. Reminder, all of the trades that you're seeing here were shared in my free premium group. If that interests you, you have the first link in my description down below. You DM me the keyword premium on Telegram, and I'd be happy to onboard you into that group. The only requirement is that you've signed up with one of my affiliate exchange links. You have all of the options down below. You start trading on there as you normally would, and you're good to go to get access to that group. But to give you a little bit of insight there, I am not posting trades every single day, only the trades that I myself am personally taking. And over the past couple days, I haven't really taken any new trades because we were fortunate enough to catch this falling knife, and I can simply take some profits and then sit on my hands and watch the price action develop. That's how you should be trading this market. But what I want to get at here is until we sweep some liquidity, I would not be looking for a new long in this market. We have these zones to pay attention to. And if we also take a look at this higher low structure, you can see that it is starting to break. That's why I've been thinking stairs up, elevator down. We've seen this before with Bitcoin. We chop up after forming a low, and then we end up bleeding much lower. And as I said, I would not be surprised if the rest of my most recent Bitcoin long actually gets stopped out and I lose out on these unrealized gains. That's perfectly okay. That's why you take profits on the way up. So what am I looking at here? First and foremost, a sweep of the liquidity, but we also cannot ignore the fact that we are still within this range. Right now, yes, we are near the bottom of the range, but there is always another chance that we can go ahead and revisit that yearly open, which I've been eyeing and talking about on the channel so much. But the reason I do that is because it's such a significant level. We have to hold above the yearly open before we can see continuation to the upside. Otherwise, if we just keep on getting rejected, which we saw again at FOMC, Bitcoin will likely break down from here. Don't shoot the messenger, as I always say. Now, taking a look at Ethereum, you can see that we're getting the same price action as Bitcoin. Ethereum actually looked quite strong as Bitcoin was holding up on these lows, but naturally, if Bitcoin continues to bleed and doesn't give confidence to the rest of the market, Ethereum will bleed as well. My next big trade will likely be an Ethereum trade, but I haven't quite positioned myself simply because I am waiting to see what Bitcoin gives us. I'm being patient here before I execute on my next trade. Now, taking a look at the liquidity, you can see that this was actually from right before I filmed my video, and I discussed how we were going to go and tag that downside liquidity. But if I refresh this, you'll probably see that all of this downside liquidity did indeed get taken. And right now there is still a little bit right around $89,000, a couple of shorts piled in, but it's not that significant. Now, if we go on the 1 week time frame, this should paint a little bit of a clearer picture. You can see that right at the low 89K level, there is tons of liquidity. We're talking hundreds of millions of dollars. Meanwhile, to the upside, it is relatively empty. Now, something I also need you to consider is the fact that now longs and shorts are almost even in this market. If you've been watching my videos over the past few weeks, you know that there was significantly more cumulative short liquidation leverage in the market, meaning this could fuel us to get a move to the upside, liquidating a lot of those shorts. However, with this most recent Bitcoin price action, a lot of people started piling into longs, and what this means is basically, longs and shorts are now even. This is not what you want to see if you are bullish, because it makes a very, very easy case for Bitcoin to bleed down from the bottom of this range and grab that downside liquidity before we can form our next base to move higher. Now, we've also been talking about the fact that bottoms do indeed take time to form. We cannot ignore this, and even as I entered this trade, I wasn't that convinced that we wouldn't come back down eventually. And I actually think that this is more than likely over the next few weeks before Bitcoin can get a larger relief rally. And if we take a look at Ethereum, there's actually more cumulative long liquidation leverage in the market compared to cumulative short liquidation leverage, which is not what you want to see if you're bullish on Ethereum either. It makes a very, very easy case to grab that downside liquidity. Now, I also wanted to talk about the Coinbase premium, because so long as this can stay green, we are still looking relatively okay, although we're not seeing some massive spikes of Coinbase premium, meaning if this starts to flip red, things will not be looking good, and we will likely go ahead and revisit the lows. And all this is happening while the Bank of Japan is set to hike rates next week for the first time in 11 months. We know that this can severely impact the markets. I don't want to make this an extremely bearish video, but the point is now you can see why. Bitcoin is essentially just chopping around in this range. We're not getting a convincing move to the upside. And as you can see here, I stand to benefit much more if Bitcoin can explode higher out of here than if we are to come back down. But I do think that there is a strong likelihood that we will continue to tag some more downside liquidity. Now, let's also address quantitative easing once more. I mentioned it in my previous video, but I just want to bring this to your attention again because some people simply do not get the point. The Fed came out and said that they would be purchasing $40 billion of treasury bills in the next 30 days. A lot of people jumped at the occasion to call this quantitative easing. This is not quantitative easing. Remember, the purchase of $40 billion in treasury bills is not QE. It's a technical measure for managing short-term liquidity used to keep the T-bills market stable and manage bank reserves. We're more along the lines of quantitative neutrality. It doesn't have the same expansionary and direct impact that true quantitative easing has. For shitty altcoins out there, you only need quantitative easing to pump them. The $40 billion in T-bills is a signal. It is a mini injection, but it is not quantitative easing. And remember what I discussed in my previous video. True quantitative easing will likely occur after we get some kind of collapse in the system. And so if you're hoping for quantitative easing, we will likely see much lower prices beforehand. That is, of course, my opinion. It is not financial advice. I'm just a guy on the internet sharing with you how I've been operating in this market and, of course, sharing my own personal trades. But the point is, we are not seeing a total regime change, rather softening. And taking a look at the Bitcoin spot ETFs, you can see that yesterday we did get some outflows. Now, BlackRock have been buying over the past few days. This is ultimately positive, but we know the impact of them dumping on the market. Make sure you're aware. So long story short, how would I be trading this market? I would not be aggressive here because we are still well within the range. We're getting close to the bottom of the range and we could see another spike towards that yearly open. It's very, very interesting price action, but it is not the time to be aggressive. That I can assure you of. I have not entered any new trades. A potential rejection point, if we are to get a move to the upside above the yearly open, could be in this tiny range over here, right around that point of control, which is found about $95,000. It also coincides with the trend line over here between 95 and 96K. That could be a move to the upside if we are to get it. But I'm still favoring a sweep of this liquidity, especially seeing that on the 1 week time frame, there is so much liquidity right below where the price currently is. And that sums up today's quick video. I'm essentially just sitting on my hands waiting to see what the market will give us. I've been a little bit more bearish than usual over the past week, and now you can see why. Bitcoin is chopping a lot of traders out. Make sure you're not aggressive right now and wait until we get the confirmation that we need before a higher conviction play. As we continue to chop around within this bear flag, if you'd like to call it, we need to get proper confirmation either to the downside or to the upside. If you enjoy the content, make sure to smash that like button and subscribe. I have my bluffin leverage trading tutorial right here, and I'll see you in tomorrow's video.